Welcome to the Karma School of Business, a podcast about the private equity industry, business best practices, and real-time trends. I'm Sean Mooney, Blue Wave's founder and CEO. During this special episode, we replay a fantastic conversation from our Ahead of the Curve Growth Strategy Symposium with my colleague Keenan Kolinsky, along with Mitch Green, Managing Director with Clairvest, and two of Clairvest's leaders within their portfolio companies, Tyler Bowley, Managing Director with Acera Insurance, and Randy Rowland, Chief Innovation Officer with Meriplex. Enjoy.
All right, so let's get started. I want to welcome everyone and thank you for joining today's Ahead of the Curve Growth Strategy webinar. We have some great content and perspectives to share, and we're excited to get into it. But before doing so, it's my privilege and honor to introduce our three expert panelists for today's webinar, Tyler Bowley, Mitch Green, and Randy Rowland. Gentlemen, thank you so much for taking the time to join us today. I'll turn it over to Tyler to start with a brief introduction on himself.
Thanks, Keenan. Happy to be here today. Tyler Bowley. I am the Managing Director of Growth and Expansion at Acera Insurance. We are a national insurance brokerage which covers and targets a very wide swath of the sort of market. And in my role, I'm responsible for overseeing a wide portion of our growth strategy.
Mitch Green, Managing Director of Clairvest. I'm responsible for bringing these two fine panelists on as they're both Clairvest investments through our portfolio. I've been at the firm over 20 years. We have a domain-based approach where we identify industries first and then leading companies within them to execute growth strategies. So very excited to talk about this topic today. Clairvest manages over $4 billion of capital and is typically a minority investor alongside owner-operators.
All right. Hello, my name is Randy Rowland. I'm the Chief Innovation Officer for Meriplex. Meriplex is a national IT solutions provider. Our mission is to level the playing field for mid-market companies so they can punch above their weight. We do this by letting them leverage our large-scale technology platforms so they can focus on their business and meet its potential. And in my role within Meriplex is I lead the connection between our go-to-market strategy and the delivery of our services, focusing on innovating our products. So everything we package, once it's contracted, we can actually sell it and meet all the customer requirements.
Fantastic. Thank you all again. We're honored and excited to have you with us today. And we look forward to the great insights you have to share from the breadth of your experiences. And finally, my name's Keenan Kolinsky, your moderator for today's webinar. I lead Blue Wave's research and operations team, and I've had the privilege of supporting thousands of our clients in their projects over the course of my 4 years with Blue Wave. Let's go ahead and dive into the interesting stuff. Firstly, starting with some key trends. When we look at today's macroeconomic environment, there are really several promising signals of stabilization, suggesting an environment really better positioned for growth activity than we've seen perhaps over the past 24 plus months. Firstly, year over year, inflation has certainly cooled. And while we're not close to the lows that we saw, 2020 and early 2021, we've certainly seen inflation steady and hover in the low to mid 3% over the past 12 months, which is encouraging. Secondly, we're seeing strengthening consumer sentiment, which can, of course, be a leading indicator to increase consumer spending, boost to business investment, higher revenues and profits, and in turn, further business investment in expansion, new projects, and et cetera. And finally, we continue to see positive GDP growth, noting and acknowledging, of course, the slight slowing of such growth in the most recent quarter over quarter. But nonetheless, these signals ultimately suggest we're pulling the nose up and leveling the wings, if you will, certainly from where we were mid-2021 through most of last year. And when we look at Blue Wave's proprietary data set, which comes from the thousands of projects that we support annually, we see promising signals supportive of growth as well. Specifically, over the last 60 days, we've observed a 70+% increase in proactive businesses investing in growth strategy projects. But what does that mean? While every project has its nuances, these projects have most often included our clients engaging strategy consulting firms to perform market analyses, For example, understanding the current market landscape, growth rates in the space, market trends, competitive analysis, and also evaluation of customer insights. In addition, these projects have included the evaluation of expansion and growth opportunities. For example, evaluating both organic expansion levers through expansion into, let's say, new geographies, new channels, selling new products or services. But they've also included the evaluation of inorganic growth levers through acquisition. Ultimately, the increase in growth strategy activity is encouraging, but I would say it's also critical, especially with the volatility and shifts that we've observed in the market and across industries over the past 2 to 3 years. Every business should really consider revisiting their growth and go-to-market strategies regularly, as your answers to the core questions such as where to play and how to win are likely different today than they were 2 to 3 years ago. Other similar key trends Blue Wave's observed include 12% and 18% increases in demand for strategy and sales and marketing projects, respectively. For context on Blue Wave service taxonomy, examples of strategy projects would include not only growth strategy projects, but also activities such as commercial due diligence, strategic plan facilitation, and voice of the customer activities, among others, of course. Whereas examples of sales and marketing projects include initiatives such as pricing strategy, sales effectiveness and training, RevOps optimization, digital marketing enhancement, and more. These increases suggest that not only are proactive businesses taking action in this more stable environment, but they're making meaningful investments in their commercial infrastructures as well, and optimizing their tactics around how to win in their respective markets and industries. So having discussed these key trends, I would like to pass the baton to Mitch Green from Clairvest to share his perspectives regarding how to determine the extent to which a business is well positioned to achieve and to support growth, and also what activities are oftentimes most critical to execute on immediately post-acquisition. Mitch?
Thanks, Keenan. I'm interested in this subject because I don't view it as a transformation of our industry and our portfolio companies. It's really just the next, I would say, step of what's been a layering process in private equity and private equity-backed portfolio companies. When I joined the industry and the firm Clairvest in the early 2000s, much of our value was created by identifying good industries and reasonably well-positioned companies in those industries. And from there, we gave them the capital to go do their thing. And the first, I would say, added complexity was when a layer of financial sophistication was required for either competitive reasons or supply chain. And then we had to do our first couple things, find the good industry, find the good company, and then really strengthen the finance teams. And from there, the next thing we needed to make sure was we took the next step in IT. And as long as we were good on some of those infrastructure building investments, the companies ended up doing pretty well, and we had a good run. And as we look at 2024, the fact is money is still more expensive. Consumption is a little bit slower. There are, I would say, systemic changes in the ecosystem where we can't count on the same drivers to get great returns from good companies. A great return in private equity is going to be reserved for the best businesses. And this go-to-market sales strategy is really that next evolution of what we need to do and the companies we work with. So these are the tests that we're putting as great an importance on as anything else in diligence. Is there not just a good industry, but is the plan logical with the dynamics going on? Are they saying we're going to do direct sales in an industry that's been intermediated on sales for the last 30 years? Might be a good idea, but is it logical within the constraints, just as an example? And is the company positioned in the good old days? If you had a scrappy small business in a growing industry, they could automatically gain share. Well, today, without the proper people and resources and technology, just being able to hustle doesn't do it. So we're looking for those things. And then it's really about the people and processes and technology, and they all need to hang together. You need to have the right leadership that's got experience with the game plans, the systems that can properly implement both. And for example, in systems investments, the CRM was the first layer. Now you want CPQ to tie in with CRM and marketing automation. And we see that in all the different companies we work with in different forms. But without the leadership, it doesn't happen. And of course, the finance as a business partner I would say that's the one thing that's kind of carried through my whole time in private equity. So with those points, I'm excited to have Randy and Tyler weigh in on their activities at our portfolio companies, because these are hires we probably wouldn't have made 10 years ago, but we couldn't live without them today.
Fantastic.
Today's episode is brought to you by Blue Wave. Building a business is hard. Top third parties can help you create value with speed and certainty, but it's difficult to know who's best. That's why you need the Business Builders Network. Visit Blue Wave at BLUWAVE.net to learn more and start a project today.
Thank you, Mitch, for those fantastic insights. As Mitch indicated, we're now going to move on to our third and final topic. We have the pleasure of hearing from Randy Rowland with Meriplex and Tyler Bowley with Acera Insurance on some tactics involved in crafting and importantly executing on a winning strategy to achieve sustainable growth.
All right. So I'll start. A little bit about Meriplex. We've grown quite a bit organically, but we've also done a number of strategic acquisitions. And our mission is to deliver consistent service across all the different markets that we execute into. And what we needed to do is actually rebuild our go-to-market engine. We've had a number of strategic initiatives that we've focused on, but I feel like one that was really powerful for us is a focus on the ideal client profile, which I'll call ICP for short. And so, as you can imagine, if you acquire those many different companies in different markets, you have 14 different go-to-market strategies, different pricing models, value propositions, product bundles. And, one of the most effective ways for us to kind of bring all of that together is say, okay, what does a 10 customer look like? What are the attributes of that customer? And so we actually kicked that off really to focus on our go-to-market investments. But then we quickly streamlined our product offerings based on that effort. We actually, when you streamline the product offerings, the ones you hand off to operations are easier to execute and provide service delivery on. And so we spent some time going through this. It was a very impactful exercise for our business. We even created scoring systems, and we'll talk about this later when we talk about KPIs, to make sure that we are talking to customers that fit our value proposition because they'll be the happiest. And what we found is we were able to revamp our messaging, revamp our product value propositions, our pricing. And once customers are willing to pay for value, if you get the right messaging correctly, the pricing just reinforced the value proposition. So this was something that was a huge benefit for our business that we continue to get benefit from.
Very interesting. Randy, thank you for that. Tyler, do you have any thoughts and kind of practices you've deployed at your own business when it comes to tools and resources for crafting winning strategies?
Yeah, I mean, if we're talking about ideal client profiles, I mean, we do certainly have, Acera covers a very wide sort of berth in terms of industries that we represent. Businesses within those industries, sort of small, medium, large. So, we do profile clients and we do sort of have an ideal, but it often will change within sort of different segments of the market. Acera, when we were formed after, our partnership, through the transaction, we sort of really came out as a new looking entity. We sort of merged two entities. And when we re-entered the market, we had an opportunity to sort of foundationally go to market as though the firm itself was a new product offering. So we have hundreds of products, like I say, in hundreds of industries and different specialties, but sort of coming out of that transaction, the fact that we sort of maintained a certain core structure of employee ownership with Clairvest in a minority position, as well as having some new scale, sort of allowed us to approach and go to market really as a whole entire firm and communicate a value proposition really on the fundamental basis of how we're sort of owned, that translating into a whole bunch of different sort of segments of our market in the same way. I'd say we're in an industry that is really hard to differentiate in, right? If you take the 10 largest insurance brokerages, all focus on many industries and have specialization and claim to sort of be able to service the best. And I think for us, we tie back a lot in our go-to-market to our platform, and why the platform itself allows us to sort of create value for clients. And I'd agree with Randy, when you do that, pricing becomes sort of one of the lesser considerations in that.
Very interesting. What about when you're crafting your growth strategy? Who, from both of your perspectives, is critical or key to involve in not only the planning, but then also obviously the execution?
Yeah, I can start on this one. For us, right, it's, it can be various, again, groups within the firm for various segments that we're targeting, but certainly our internal marketing team, our sales leadership team, our operational team plays a big role in crafting our strategy as well. Inbound, outbound, we have, a sort of an online presence, which is managed in a different way. So we're effectively involving leadership from just about every significant sort of area of the business would be probably the answer.
Yeah, so luckily we had some folks that have been through this exercise before. So we did the same thing. We brought our whole go-to-market leadership team together. We kicked it off with a summit and then followed on with a number of workshops. And really what we were focused on is, what does a perfect 10 customer really look like if we were to pick it? And then let's define the attributes, because if you do a good ICP, you can actually target those customers, but you can actually broaden the scope a little bit to get others that may not have all the attributes, but are close enough. And so we were able to leverage our private equity partners. They were heavily involved in this process. They had resources, experience, and ideas that allow us to look at from a lot of different angles, things they've picked up from their other investments that were leveraged. And then finally, this about how do we reinforce? So once we've gone through the exercise, we actually used our annual national sales kickoff to actually train the entire go-to-market engine on what we've come up with. And then we've done follow-on training on a weekly basis. We've had some in-person summits that are specialized for specific things, but we've been able to reinforce that and actually create alignment. And so, our mission is that 80% of our customer-facing sellers are providing the same value proposition, and that we can hone and improve and increase our conversion ratio.
And Keenan, if I can jump in, just observing both businesses from a board perspective, there's a lot of shared attributes in that managed IT is a service that almost any small to mid enterprise customer can purchase, and insurance, of course, they all need it. So, differentiating, attracting the best clients for their organizations. And I would also add, the cost of getting it wrong is really high, because Acera is measured on, ultimately the performance of the risk that they're underwriting for their insurers. And if they're getting bad clients in there that don't look after safety or whatnot and drive up claims, it hurts the whole organization. And the same thing for Meriplex with subpar IT infrastructure, the cost of dealing with those clients and moving them onto the better platform. So it's a huge success factor getting that right.
Makes a lot of sense. Obviously, whenever a business is establishing its strategy and executing on it, obviously it's critical that these businesses measure and monitor how they're tracking towards their goals and towards ultimate success. Randy and Tyler, what are some of the key KPIs that you've deployed and kind of monitor in your own businesses?
Yeah, so to piggyback on some of the things Mitch says, I actually would reinforce what he said. If you don't get specific about what you're targeting, you can be very inefficient with your spend. And so we've created what we call our ICP scoring system. It's how we score all new leads and new prospects. And what we found just in the early days of adoption is that opportunities to get low scores, generally, we have lower win rates or less than ideal contract terms, or maybe even deeper discounting. And so we're using this information earlier in the sales cycle to maybe even abandon opportunities more quickly, right? And reinforce and make sure we get the right resources on the right opportunities. And one of the things that we've learned over time is that we track our win ratios. Our win ratios are going up. We get actually better pricing for both the customer and for us. And that continues on. And then what we also find is that when we're selling to the right client profile, the customer satisfaction numbers are naturally higher. And so I think those are all little mini taxes you pay if you don't get focused that could make your investments less impactful. And that's why we continue to hone this, and the scoring system has really helped us.
Yeah, and I would, sort of, we don't have specifically a scoring system, but we put a lot of time and effort into qualifying opportunities for sure, and making sure that we have, a pipeline that is sort of fit for purpose to where we believe we can add value within the market. So we certainly track, and we do a lot of training around how our people qualify opportunities to make sure that we have alignment between those opportunities and the value that we think we can generate. We of course, very, very closely watch sort of conversion ratios, and of course we see those go up when our opportunities are qualified, and we avoid the tax that Randy sort of alludes to. We do like to look at lost opportunities where they're qualified and get a good sense of, why didn't we win in an area where we think we can? What sort of went wrong? So we do some KPI tracking around that. Then of course we're obviously looking at the big things like revenue, which of course is an obvious KPI, but also the margin that we're sort of getting, and making sure that the business that we're writing is business that's profitable and that we want to continue to write. Because I think you can be winning sometimes in areas that isn't overly lucrative to the business, and so we do watch that as well.
And also when it comes to setting a strategy and executing on it, there are not only short-term kind of quick wins, if you will, or the low-hanging fruit, but there are also longer-term items included in your strategy and in your plan. When it comes to growth-oriented activities, Tyler and Randy, would love to get your thoughts on, potentially some of the short-term initiatives businesses can pursue to achieve growth, as well as longer-term initiatives that they should consider to achieve growth.
Yeah, for sure. Like from our perspective, with Acera, and where we've sort of been coming to market kind of post-transaction with a new brand, a big part of our initial sort of go-to-market and growth strategy was just sort of getting our name and getting some awareness out there about what had occurred, who we were, making sure we didn't lose sort of part of what was important, which was two very strong legacy brands. So in the short term, a lot of effort went into sort of that, logo branding, sort of, color schemes, things like that. And then as well, a lot of focus with our sales teams put on how we're articulating, right, post-transaction, what our new platform sort of provides and how it might add value. So that'd be sort of the very short-term things that we really focused on. Obviously, as we get out of the gates, we're looking within our ideal client profiles and in areas we're targeting to see what sort of penetration that we can get. And then as we start to have success with some of that, we're looking at, how we can expand into other areas of the market where we're proving out sort of a growth strategy. And we're saying, yes, we're having success here and executing. A logical next step for us is, okay, how can we now move up or down market where we see other opportunity to add value? How can we expand geographically? And for us, some of that comes organically, other comes through M&A activity and other partnerships with other businesses. So those would be some of the short and long-term things that we're sort of focused on.
Yeah. And so for us, now that we've kind of got our ideal client profile in mind, we've spent a lot of time changing our brand identity to follow through on that. And so just in the IT services market, there are, from a mid-market perspective, there are MSPs that are local, that are owner-led, that are really designed for more smaller businesses. And then you have the large IT outsourcing companies. What we've really done is focus our brand on, we have no plans to go up market. You're a big fish in our pond. You're important to us. And there's a little bit of a identity in that mid-market, where mid-market companies, they don't want the unsophisticated partners. They also don't want to get lost in the fray with the large providers. And so we're reinforcing our brand in a way that, we plan to be the juggernaut to enable US-based medium-sized business. And you're in the right place and you're important to us. And so that's what we've really done. Our initial focus has been on new logo acquisition. And what we've seen is our cost per lead has come down and our win conversion ratios have gone up, just because we're a little bit more targeted in what we're going after. Our next phase is to go through our existing customer base through the renewal process. Good news is most of our customers already fit the ICP, which is where most of our ideas came from, is from our existing customers. But then you will find from time to time that you have a situation where You may have someone outside the ICP have an opportunity to renegotiate pricing or get more capacity back for the core ICP that we're after. And then I agree, we use this information as we go into M&A. We may look for acquisitions that could expand our ICP from a capability perspective or take that same message to a new market. So it definitely informs our growth, both organically and inorganically through M&A.
Fantastic. Mitch, before we move on, any additional comments from your side?
I'm just watching from my seat. I see the spin-off effects of doing this right in some other things in terms of everybody's sophisticated now. It used to be you offered someone a job and they maybe did a little checking, got a reference from a friend and took it. Now you wouldn't believe the diligence we get from mid-level management and up, and they're asking all these questions. How are you differentiating? What is the go-to-market strategy? Am I going to be on the winning team? It's not just a nice dinner anymore and I'll sign. And when we're acquiring companies, of which both these companies have made many acquisitions, they're asking the same thing. They're selling their baby into this platform. They want to know it's going to be the right thing for their people, for themselves. So it's critical. And it's not just for winning customers.
Agreed. Well, Mitch, Randy, Tyler, thank you for those great insights on how you all have approached growth strategy and the execution of that strategy at both Acera and at Meriplex. Fascinating and incredibly helpful. So that concludes today's kind of core content of our webinar. And I want to once again thank our three fantastic panelists, Tyler, Mitch, Randy, for sharing their perspectives and knowledge with us today. And finally, thanks again to our audience for taking the time to tune in. And we absolutely look forward to seeing you next time.
Special thanks to Mitch, Tyler, and Randy for sharing their insights, along with my colleague Keenan Kolinsky for hosting. If you'd like to learn more about Clairvest, Acera, or Meriplex, please see the episode notes for links. Please continue to look for the Karma School of Business podcast anywhere you find your favorite podcasts. We truly appreciate your support. If you like what you hear, please follow, 5-star rate, and share. This is a free way to support the show, so thank you in advance. In the meantime, if you need to be connected to the world's best-in-class, private equity-grade professional service providers, independent consultants, interim executives, or anything else that are trusted by hundreds of the world's top business builders in private equity and beyond, please give us a call and visit our website at bluewave.net. That's BLUWAVE.net, and we'll support your success. Onward.